Good evening, and welcome to this week's Strategy of the Week, a prudent pathway to consistent profits. This is Kevin Crowe, Manager of Retirement Services, and I'll be your presenter this evening. Since the mid-1990s, the first week of each year, I reread two books that keep me well-grounded as an investor. They are Napoleon Hill's Think and Grow Rich and Dr. DiLiddo's Stocks, Strategies, and Common Sense. These books have helped me shape the foundation of my trading business plan, and they subsequently have helped me in my work with VectorVest clients. In working with our clients via seminars, webinars, and over the phone, there are several observations, thoughts, and feelings that I'd like to share with you as a backdrop to this evening's strategy. First off, it is my observation that investors assume way too much risk. They're looking for the quick hit, the big return, and as a consequence, they look past the opportunity to have consistent results. All too often, we're also influenced by the financial media. This has now become a 24-hour-a-day industry, and we can't help but be affected by it if we do not have confidence in our own ability to do the appropriate research, select the appropriate strategies, and manage our money as though it's our own business. Additionally, I found that people often have trading strategies that they use because of recommendations of colleagues or things that they've read, and many times these strategies are not aligned with their own personality. At the end of the day, we all have an investment personality. It's that little investment voice inside all of us that is telling us very quietly about our propensity to take risk and assess reward. And it's been my own personal experience that when I've gone against that little investment voice, it usually is quite painful in terms of costing me money. Additionally, because of the preponderance and onslaught of information from the print media, the TV media, well-intended friends, I have found that investors often find themselves confused and frustrated. And many times as a consequence, they give up. And finally, if I were to point out one thing and say this is the most common mistake that I see people make, is that their first intention and focus is on profits versus risk management. And I'll go out on a bit of a limb here in saying if you're north of 50 years of age, risk management needs to be your primary objective and profits second. This evening's presentation will hopefully give you some insight on how to increase consistency of results by prudently using VectorVest. A number of years ago, I read an article in Stocks and Commodities magazine authored by a graduate student at the University of Chicago. This student used VectorVest to buy high VST descending stocks in various share allotments and various time frames. He would sell at the end of a period being tested, which was usually quarterly. He did not use any market timing. He repeated this process over several time periods and achieved very respectable results. As I said, he did not pay any attention to market timing or other VectorVest factors to mitigate risk. At the time, although I was impressed with his result, I knew my own trading style was that of a prudent investor, as defined on page 55 of Dr. DiLiddo's book, Stocks, Strategies, and Common Sense. I wanted the better of two worlds, high returns and low risk. This evening's presentation, our first strategy will buy stocks at the beginning of each quarter of 2013 and sell at the end of each quarter. Market timing will not be used, and we'll then run a second strategy in which we'll use prudent risk criteria. However, we will buy on a confirmed up and sell on a confirmed down in a similar time frame and compare the two results. So let's begin by taking a look at the VectorVest strategic investment matrix for some perspective. As you can see in front of you, we have our investment styles and searches. In our bottom axis, we have risk, and we're going from lower to higher. And on the left side, going vertically, we're going from lower returns to higher returns. Let's start down here in the far right corner, the speculative investor. If I can use a term such as American baseball, this investor is looking for the home run. In fact, they're not only looking for the home run, they're looking for the home run in a desperate situation. In many cases, they're willing to throw away common sense, good stock selection, market environment, And because of their desire for profits first, they have no regard to either the RV or the RS, which is both below 1.0. Additionally, on this side of our risk tolerance graph, we have the aggressive investor. And the aggressive investor wants above average returns. As you can see, our RV is greater than 1.0. However, they're willing to take risk or select stocks whose consistency of profits and financial results occur very regularly and in a very rhythmic way. If we come to the lower left-hand corner, we have our conservative investor. And you'll note the RV is less than 1, which means they're willing to receive returns on their investments that are very similar to the returns you'd receive annually on a AAA corporate bond. The RS being greater than 1 means that they also want to choose companies who have the consistency and predictability of price performance and the various financial metrics that make that a sound company. And finally, we arrive at the prudent investor in the upper left-hand corner. The prudent investor wants the best of both worlds. They want an RV greater than 1, which means they're not willing to settle for the returns on a AAA corporate bond. They want a higher return, but at the same time, they want companies who are out there quarter after quarter having very consistent returns and their financial metrics are sound across the board. Using this as a backdrop, I wanted to quick test the two strategies mentioned earlier. In the first test, we're going to buy 10 of the top VST descending stocks from StockViewer at the beginning of each quarter and sell at the end of each quarter. And I repeated this each quarter for the first 3 quarters of 2013, and there was no market timing involved. The second quick test strategy will take into consideration the prudent investor profile, and the VectorVest confirmed market timing system will be used for both entry and exit. So let's take a look at our setup strategy for our first test. In strategy number 1, we're going to buy VST descending stocks from StockViewer on the first trading day of each quarter of 2013. We will sell on the last trading day of each quarter, regardless of value. The third point is we will not use any VectorVest timing signal. You can see the dates tested. So let's go to the home page and see how this was done. Our first step is we'll come up here to Viewers, come over here to StockViewer, click on StockViewer, and we're going to change our date to January the 2nd of 2013. We're going to quick test the top 10, but remember we're doing this to the end of the quarter, so we've got to change our date. And we're going to change our date to March the 28th. We click OK and run test. Let's take a look at our results. First off, our return was a respectable 8.15% or 35.0% annually against a VectorVest return of 1.5 and 6.45. Very, very respectable. However, keep in mind that we are not using market timing, so we are potentially prone to market changes in market direction. We'll X out of this. We'll come back up to our date bar. And now we're going to put in the date of April the 2nd, 2013. Click OK. Again, we will quick test the top 10. But remember, we are using a quarterly finish, so we'll change our finish date to June the 28th. Click OK. Let's double check our dates. We have April the 2nd, 2013 to the 28th of June, 2013. Let's run test. Whoa, what a change. We're down 11.49% for the quarter, worse than the VectorVest composite. So on our first quarter, we earned 8.15%. The second quarter, we lost almost 11.5%. So rough math says I'm down negative 3% after the first half a year. That gets pretty discouraging. Well, let's continue our journey. Perhaps we can come up with some solutions. I'm going to change the date for our last quarter, which is going to be from the 1st of July, 2013. I'm going to click OK. Validate we have the correct date. We're going to quick test top 10. But keep in mind, we've got to change our date to our finish date, which is September the 30th, 2013. And let's run test. Well, we had a rebound in the third quarter, up 20.16%. Also a strong performance in the VectorVest composite. What a roller coaster ride. Up 8% in the first quarter, down 11.5% in the second, up 20.16% in the third quarter. Now let's take a look at our setup for strategy number 2. We're going to buy VST descending stocks from StockViewer. However, this time instead of buying on a quarterly calendar basis, we will use our confirmed market calls, and we will buy on a confirmed up and we will sell on a confirmed down. However, we're going to add some prudent criteria and additionally some other criteria that I believe would enhance our returns. So as you can see, our RV is equal to or greater than 1, relative safety equal to or greater than 1. I also want to make sure any selection I'm interested in, it currently has a VectorVest buy recommendation, a growth rate greater than 20. I have a passion for companies who are making money. I do enjoy sleeping at night, so I wanted to include a comfort index greater than 1.0. So let's go to our home page, and now we're going to set up our second quick test. And as you can see, I have our RV, RS, growth rate, comfort index. And by the way, I have moved these from other parts of our grid by doing the following. By clicking anywhere on the spreadsheet, go to Layouts, find the particular parameter that you want to change, click on that, and using the up or down arrow, you can move those parameters or values to a place in the columns that you like. I like to put the growth rate, the comfort index to the left of the recommendation buy, because then I can see all the metrics that I need to be interested in. So our first test is going to be from the 19th of December to the 20th of March. So I'm going to come up here, we're going to scroll back to the 19th of December of 2012. That is a confirmed up. I needed to go back a little bit into December to get a good run from that December date until the confirmed down, which occurred in March. You can see we now have the date of the 19th of December 2012. Now let's take a look at our first selection, which is going to be Ainsworth Game, ticker symbol AGI.AX. Our relative value is at 1.70, relative safety at 1.47. We have a growth rate of 35. Remember, our minimum is 20. We have a comfort index of 1.91. And we have a recommendation equals buy. I'm going to go to our next stock, Magellan Financial, select the 10 stocks that meet the criteria as outlined for strategy 2. Putting my cursor on Magellan Financial, I'm going to hold down my control button, left click, and you can see how it's highlighted Magellan Financial. EAX, GIN, GEM, ALU, CTD, IMF, CWP, and UXC. So let's double check to make sure that all these stocks selected are meeting our parameters. And you can see that all of these stocks do meet those minimum requirements for RV, RS, growth rate, comfort index, and are a recommendation equals a buy. I'll come up here, but now I'm not going to quick test the top 10. I'm going to quick test selected because I've highlighted these stocks. So I'm going to click on quick test selected, and we're running this quick test from the 19th of December to the 30th of March. So we've got to change our date. We have our starting date correct. Now we've got to go to March of this year. You can see the 20 is highlighted. Additionally, I can get confirmation of that by coming over here and seeing the confirm down on the 20th of March 2013. I'll click OK. I'll run the quick test. And up a solid 12.79%, 51.31% annually. Now for the next period of time, which is basically the 20th of March to the 11th of July, we were in a confirm down. So we see the 20th of March, we went to a confirm down, and we didn't come into a confirmed up until the 12th of July. So for that period of time, we stayed in cash, and you'll see the impact of that in a few moments. So in our second quick test, we're going to change our dates to that last confirmed up to confirmed down, which was the 12th of July, 2013, to the 30th of September. So we'll come up here, we'll move forward to the 12th. We see the 12th highlighted as a confirmed up. We'll click OK. We'll quick test selected, but we've got to change our finish date to the 30th of September. Come down here, go back 1 month, and I use the 30th because although we were still in a confirmed up, at least I had a finish date for the purposes of this demonstration equal to our first quick test, which ended at the end of the third quarter of 2013. So I'm going to click on the 30th. I'm going to click OK. I'm going to run test. So on July the 12th, 2013, these were the stocks that came up in our stock viewer. However, we're going to apply our prudent criteria as outlined in for strategy number 2. So we've got Magellan. Let's do a quick test. RV greater than 1, RS greater than 1, growth rate 4.3, comfort index greater than 20, and recommendation equals a buy. By holding down the control button, I'm going to click on the following: ENE, ALU, GBT, FNP, IAG, PMC, WPL. Got to scroll down a bit, left click on MFF, and finally CLO. So let's take a look at the results of test number 2. As I stated a moment ago, from the 19th of December to the 20th of March, 12.79. We were in a cash position from the 21st of March to the 11th of July, and a 15.74% return from the 12th of July to the 30th of September. Our total return, cumulative return for that period, was 28.53 against 6.75 for the VectorVest composite. But keep in mind, we did not have any drawdowns as we did in the first quick test. So let's finish up our presentation this evening by looking at some summary and conclusions from the various quick tests that we ran this evening. First off, we can see that by using our confirmed market calls, it gave us greater consistency because one of the things we eliminated was that severe downturn in the second quarter of the first quick test. Secondly, one of the things I want to point out, and hopefully you saw that when I was using and constructing the various quick tests, is the power of VectorVest. It is unbelievable. I've been in the financial services business for 35 years. I've been using VectorVest since the mid-90s. And there's not another program out there that I have ever found that can get me the information I want and accurate information in such a timely manner. Unbelievable. Additionally, I think we illustrated the protection of capital by choosing to go to cash. And let me make this statement. Cash is an underappreciated asset class. And as I stated earlier, if you're north of 50, you've got to give a great deal of consideration to protection of your capital. Fourth, we reduce anxiety in a down market. You know what? It's okay just to sit there and be safe and let the rest of the world go crazy in the financial markets while you've compiled a nice return and you're waiting for the sunshine to come out and for the rain to stop. Fifth, we align this according to an investment profile. In this case, I used the prudent profile. And I think many investors are looking for the same types of things with a prudent profile: high returns and low risk. Finally, hopefully this gives us confidence, and as I stated earlier, I love what I call the simple brilliance of VectorVest. I don't know of another place, and I've searched, that you can find what you need in terms of accuracy and speed, unlike VectorVest. And in closing, I wanted to compare two strategies by showing a strategy used with market timing and one without. And as a consequence, I hope you've come away from this evening's presentation with a better understanding of who you are as an investor and the most comfortable way for you to make money. Thank you for listening, and I hope you have a pleasant weekend.